This is what you need to know as stocks fall like crazy and Wall Street bros gear up to head into the worst week in 3 months as stocks face a reality check. I'm Kiana, the Invest Diva, former engineer. I grew my portfolio from 500 bucks to this in the past decade, here to help you beat the Wall Street bros at their own game. And to these types of clickbaits, I say boo-hoo and please stop with the doom and gloom game. This is what the markets are all about. Observing the emotions of grown-ass men as they get excited about rumors and then they throw a tantrum once the news come out. At Invest Diva, we do things differently. And if you want to see results like our members see over a long period of time without getting panic attacks every time the markets fall and without being stuck to your screen all day, I suggest that you do the same. We sell when Wall Street bros are wearing their happy pants and clicking the buy button all day, like I did all of past couple of months, as I shared here publicly and in my newsletter. We then buy when Wall Street bros throw a tantrum, but we don't buy them all at once. Investing obviously involves risk of loss, and you can never, ever, ever time the market. You can, however, price the market. That means studying the history of Wall Street bro psychology on the charts and seeing the price at which they stop being overly emotional and start taking a chill pill. We call these key psychological levels, and these are the prices at which you can start dipping your toes back in, and it all depends on your risk tolerance. 96% of traders lose money in the markets because they haven't precisely measured not just their willingness to take a risk, but also their ability to take a risk and their confidence in the asset they're planning to invest in the specific time frame they're planning to hold on to that asset to. For example, if you're a long-term value investor, these tiny ups and downs are nothing when you zoom out and look at the big picture. But if you're a medium-term swing trader, or if you're taking advantage of options, you need to be damn sure you have not just the willingness to risk the markets dropping lower, but that your portfolio can take it without getting a margin call. What is beautiful about studying the charts is that just like history, Wall Street bros' emotions rhyme and sometimes even repeat itself year after year after year. This is how I was able to identify the top of S&P 500 here. And now, using the Fibonacci retracement levels, you can see that the next key psychological levels the SPX can drop to are shown here in orange. The purple levels have a lower probability of reaching. So at each level, before you decide you're going to buy at that price, you need to ask yourself what I call my confidence compass questions that I'm about to share with you in 10 seconds, but understand that this is a decision only you can make, and only you can make it after you have measured your ability to take a risk. You can measure your risk tolerance by grabbing my free risk management toolkit, which comes with my free triple compounding training that is going to help you secure your financial future and accelerate your freedom. And here are the 2 confidence compass questions to ask yourself before buying at each level. Number 1, if I buy at this price and the price drops by another 50%, how would I feel? Would I panic, or would I buy more to dollar cost average at lower prices? Hint, this question also reveals your confidence in the asset you're planning to invest in. Number 2, if I don't buy at this price and the stock suddenly turns around and starts going up again, will I beat myself up for not having bought at this level? Of course, both scenarios will suck. Your job as an Invest Diva or Invest Diva who is in charge of your emotions and money is to get really raw and vulnerable with yourself and honestly decide which scenario would suck more. And then make a decision not to do the scenario that sucks more, and then stick with it. No victimizing, no panicking when things go the opposite direction. Just a steady and in control triple compounder who sees the Wall Street bros tantrum and takes advantage of it. And I'm here to help you along the way. So hit that follow button and don't forget, triple compounding is the way. Thank you for watching.